maybe first, just talk about your reaction to interest rates not moving yesterday. I know you were pretty bullish on it being a buy the news type event, which it seems to have been.
The market had been de-risking over the last couple of weeks, right? And so whenever you have some kind of known event like this, generally people, the framework I'm going to talk about, people generally apply to like buy the rumor, sell the news, right? Where you have, kind of the insiders getting in first, information comes out, the kind of works its way down the informational, totem pole or human centipede of information. By the time it gets to the end, when the event comes, there's no new buyers because everyone's already buying in anticipation of this event. Right. And so my kind of thesis over the last few days, and this kind of why I texted you is like what I was thinking was kind of this reverse in the sense of, you're selling the rumor, buying the news because everyone's already de-risking. And then by the time you get to the event, right, that everyone's saying is going to be bearish because they've all risked off heading into it, who are going to be the sellers left? And I think that we kind of saw that yesterday where, the Fed was slightly more, hawkish than I kind of expected them to be. But, I think, the only real sellers that would have stepped in yesterday are people that, had been expecting the Fed not to raise rates, and somehow that would affect their crypto, thesis. And so, yesterday I wasn't really surprised to see that kind of be this buy the news event, if you will. And so, yeah, I mean, I wasn't, all too surprised at all by the reaction that we got, as well. Leading up to that, we also saw a couple other kind of telltale signs, but just from like a fundamental perspective, I think, doing some thinking as to like, sometimes it's as simple as thinking like, okay, who are going to be the buyers or sellers for this event? And so conversely, like, the opposite of this would have been like, the Coinbase, which was, the Coinbase IPO, which was the absolute, Pico top on April 14th. So for some of these events, sometimes it's not entirely obvious. Sometimes you'll say, okay, I know there's going to be some kind of reaction, but not, sure exactly, where it's going to break. For example, like I think Coinbase was a better example in that case, where it wasn't so clear, but once we started to see the market break a certain direction, then you would have then become cautious. But during this specific event, I think it was pretty clear that just thinking about who were the sellers going to be left, it was really hard to think that the majority of those who were going to de-risk hadn't already done so.
All right. One of the things that I saw that you pulled up, we've got a couple of charts here that I think is absolutely fascinating, is that even though the price has been drawing down, we've got this Purpose Bitcoin ETF. It looks like people are still putting assets into this thing. So what is this showing us?
Right. We're just looking at the holdings of the Purpose Bitcoin ETF, which is a spot ETF in Canada. And what we've seen over the last 2 weeks is their holdings have actually, and by the way, I haven't done the newsletter this week, so I might mess up some numbers here because I'm not reading off my newsletter, but I think they've added about $240 million of BTC in the last 2 weeks during this drawdown, which is anything that's going to significantly move the market, right? But at the same time, it's just more of a sign to see that there is still hunger from people looking to buy Bitcoin and likely institutional or kind of traditional investors that are going to buy through an ETF versus just take custody of their Bitcoin. So. I just think that's a kind of a promising sign in terms of looking at, like institutional flows, if you will. I think in total now they hold like $1.5 billion of BTC. And this is just something for Gary Gensler to look at and see, there's definitely an appetite for, a spot Bitcoin ETF.
Yeah. All right. Then when we start to look at the supply shock ratios, we've been talking about these for months and months and months and months now. Back in June and July, a lot of people will remember that you explicitly highlighted this idea of a bullish divergence. You've got it labeled on this chart here. When you look at this, is it happening again? Like, how do you look at this and what is this telling us?
Totally. So, first of all, just before we get into the specific chart, the way I'm looking at, and this kind of evolved, is the way I see this is like on-chain is macro, right? So we have that kind of giving you the underlying like broader current of the market. And then we can look at things like, order books or derivatives data, which is extremely important on the shorter term timeframes. And then price action is kind of our confirmation of that. So with that being said, right now we have a bullish divergence between the liquid supply shock ratio and price, which means that we're seeing supply moving to long-term investors or entities that have very low spending history, meaning they take in and hold at least 3 out of every 4 coins that they take in. And this is very different to what we saw over May, or in May, I should say. In May, you saw this decline as we kind of had this relief bounce, if you will. And at the time, if you had this metric, you definitely would have wanted to be cautious, right? Because you're seeing supply moving from entities that were previously strong hands to now becoming weak hands. So supply moving from entities who take in and hold most of their coins that are now becoming those weak-handed entities or liquid or highly liquid entities. And so there's a kind of a key difference between that and kind of the underlying structure of what's going on in the market right now. You don't have fundamental investors that are currently turning into weak hands. And this was also reflected in, and this is kind of a good segue to the chart I sent. It's net realized profit loss. And so on kind of a similar note, what you'll see here is that currently investors are realizing losses more than profits, which just means that you have supply that was previously bought overhead is now being sold, at these price levels. So, people that essentially bought the top are now capitulating down here versus, fundamental investors that bought in, a long time ago that are now deciding that this is some kind of fair value for them to sell their BTC. You have more so it's kind of capitulation from top buyers. I mean, that especially happened last week, as you can see that big spike down. And we've kind of been progressively making, higher lows in that, meaning that the amount of realized losses is subsiding, meaning that the kind of capitulation is slowing. And so that's kind of ties into the previous chart I looked at, meaning, and what I'm just trying to say out of all of this is that the sellers that we've had recently. So initially we had this large drawdown, right? Because we had all these over leveraged longs. And then, recently we've just had people kind of capitulating, and that's been getting absorbed by long-term investors. And we're just kind of in this range, right? For the past 2 weeks, we've just talked about, last week I said I'm a crab market maximalist, right? We're just chilling in this range. And, until we have some kind of clear break, in my opinion, that's defined as, getting above and holding 53K, or below 40K, for the bearish scenario, until we break either of those kind of, invalidation points. I think we're still just ranging, right? And so like, it's really easy to get, chopped up in these ranges. I see like Twitter sentiment. It's like, we get to the top of the range and everyone thinks we're going to the moon. We get to the bottom and everyone's saying we're going to zero. This is like the same thing that happened over summer, right? Like every time we got down to like 30K, everyone's like, oh my God, 20K, this is it, or we're going to zero. Every time we got to the top of the range, especially when they had with that one move up to like 40K, everyone got like insanely bullish. I think it's really important to just have these like kind of key, invalidation points that kind of say, okay, yeah, we've either, broken to the upside or downside of the range. And to me, that's 53K, which we'll get into in a second, as well as 40K to the downside. I think like you definitely don't want to lose 40K for the bulls. I think I've been cautious since we had all the derivatives pile up, and especially after we broke below 53, because I said that was kind of like my uptrend kind of cut off for Bitcoin. But definitely if we broke 40K, that be pretty bearish. But to say that we've gotten back out of this range, which has been kind of called between 42 and 52K. I'd be looking for a break and hold above 53, which we can talk about in a second as to a couple different reasons why I think that's the case.